In a previous video, we talked about how to make your investor pitch understandable. But of course, you have to do more than that. You have to make it compelling. And today we'll go through 8 specific tactics that you can use to ensure that your investor pitch is compelling. Hi, I'm Steve Morris, and I use this Startup SOS channel to provide practical advice to first-time entrepreneurs. Today, we'll talk about how to make your investor pitch compelling. Number 1, we have to start with the topic from last time, which is be understood. If your pitch is too complicated to understand, it sure as heck will not be compelling. So check out the previous video on ways to be sure that your pitch is simple enough that people can actually understand what your business is. Tactic number 2, the need that you've identified needs to be compelling. Now keep in mind, the audience you're pitching to, investors, may not be your target customers. They may not have that need. So you need to get across to them why this is a compelling need to your target customer. Again, the customer story we talked about in the previous video is a pretty good way to do that because you really can convey the emotion, the why it's important. But conveying that to the audience, to the investor audience, is critical. They really need to realize that this isn't just a nice to have solution. This is a solution that your target customers really want. Number 3, your competitive advantage needs to be compelling. Way too often in a pitch, an entrepreneur will describe who the competition is and talk about some just trivial differences between what they're offering and what the competition offers. Well, that's not good enough. You really have to zero in on why customers are dissatisfied with the competing solutions and why they will prefer your solution over the competition. That's got to come across strongly, not just who the competition is, but why will customers prefer your solution over the alternatives? Number 4, not only do you need a competitive advantage, a product advantage, you also need sustainable strategic advantages, advantages that are harder to duplicate. Realistically, once your product's out there, most likely somebody will be able to copy it. So the product features alone aren't enough to ensure that you're going to win. So what other advantages can you develop that are harder to copy, harder to clone? For example, maybe you have some patent protection on your product. Well, that gives you an advantage that's a little harder to copy. Or maybe a trade secret, what you're doing is hard to figure out and gives you an advantage. That can be an advantage that's difficult to copy. Maybe you nail down a strategic customer, for example, that gives you an advantage, or a strategic partner, which then the competition can't work with, and that gives you an advantage. Maybe you have a world-class team where there's just very few teams in the world that are as good at doing this as your team. That can be an advantage. Maybe you have an existing customer base that you can leverage. Again, that can be an advantage. So it's a good idea to think through what kinds of strategic advantages can you build that will keep your company ahead of the competition? And again, be something that's harder for the competition to copy. Number 5, the market opportunity has to be compelling. Now, number 1, it has to be a compelling need. We already talked about that one. But number 2, it has to be a big enough market. If your market size isn't measured in at least hundreds of millions of dollars, it's very difficult to get investors interested. So if you're looking at a very small market, you might want to go back to the drawing board and reassess how you're going to tackle the market and see if maybe there's a way to address a broader market than the one you're looking at. The other aspect of a compelling market is the sales cost. If you're tackling a market that just has a reputation for being very difficult to sell into, you'd better be ready with a story for investors as to why you're going to be successful in tackling that market. An example, if you're selling to utilities, utilities can be tough. They move pretty slow and they're pretty bureaucratic and tied into political processes and regulation. If you don't have any experience selling to utilities, boy, that's a tough road. So you need to be able to make sure that you're credible selling into the market, especially if it's a market that investors are going to be biased about in terms of, wow, this is a tough one to sell to. So think about the cost of sales, think about the difficulty of sales, and be sure you've put together a strong story for investors. Number 6, compelling financial projections. If your financial projections show that 5 years out, you'll have revenue of $2 or $3 million, that makes it very difficult for an investor to pencil out a return that's attractive. Now, exactly how much do you have to have in a revenue forecast to be exciting? It depends on a lot of things, including how quickly you think you can exit. But in general, if you're not looking at a business that can generate $20 or $30 million in revenue looking out 5 years, it can be very difficult to get most investors interested. If it is, say, a market that's hundreds of millions or $1 billion in size or more, why are you projecting just $2 or $3 million out 5 years? With the right investment and that kind of a market size, there should be a potential to generate more revenue. So go back to the drawing board and rethink your revenue forecast if it's on the very, very small side, looking out 5 or 6 years. Number 7, the exit opportunity has to be compelling. An investor is investing because they want to get a return. And by far and away, the more likely way for them to get a return on investing in your company is when your company gets bought by a bigger company, either for cash or for stock that's tradable on the public market. So you need to do your homework to have a compelling exit strategy to show investors that you understand they need an exit and you're thinking about it. Are there acquisitions in your market? Who does those acquisitions? Why do they do those acquisitions? When in their life stage do companies get acquired? Why do you think specifically your company will get acquired? And name 2 or 3 potential acquiring companies and explain why you think they would buy your company. And take a look at what valuations are like at the acquisitions that have happened in your market. And that'll give you an idea of how much a company might be willing to pay for you 2 or 3 years down the road, depending on what your revenue level is. So think through all of that exit strategy, and you'll have a much more compelling discussion then with an investor. And finally, number 8, you need to be compelling. The CEO in particular who's pitching investors has to come across as compelling and competent, able to lead a team, able to motivate people. It really is you, the CEO, that's going to pull off a whole lot of what has to be pulled off to make this company work. So you have to convey that kind of confidence. Well, that means that number 1, you need to practice this pitch. Practice it enough that you can just do it cold. Practice it so much that you don't have to memorize it. If you memorize it and it sounds like you're reading a script, it just will not come across as being very compelling. So practice a bunch. Don't hide from the audience. Don't present behind a podium. Get out there and engage with the audience. That's a much more effective technique. And don't present back to your slides if they're being projected or displayed behind you. Hopefully you'll have your slides shown in front of you, and hopefully you know your pitch well enough that you just don't have to look at the slides very much. So be sure you're presenting to the audience. Show some passion. If you don't show some passion in presenting your business opportunity, you sure won't develop much passion on the part of the audience. A couple of other suggestions. Check out the video by Amy Cuddy. There's a link to it down in the notes on power posing. A fair amount of research shows that if you do some strong power posing right before you go on and do your presentation, it will make you more confident. It's a funny thing. The mind follows the body. So if you're looking very strong in terms of your posing before you go into pitch, you'll actually do a more compelling presentation. Another video I suggest you check out is Vanessa Edwards' video on the 5 secrets of successful TED Talks. Now, it's about TED Talks, not investor pitches, but I believe the techniques she talks about apply equally well. 5 of her findings. Number 1, body language really counts. Again, check her video out for more details. Number 2, hand gestures. Presenters that use their hands as opposed to, in the pockets or around here or in front, using your hands just comes off better. So that's a good thing to think about. Vocal variety is a good thing to think about. If you sound like you're reading a script, that won't be very compelling. You need to use some vocal variety. Tell some stories, tell some anecdotes, mix it up. It'll make you a much more interesting presenter. Another finding, smile. If you smile, turns out people like your presentation a lot better. And last but not least, you have to set an impression early. People set a pretty strong impression in the first 7 seconds of your presentation. So you don't have long to establish that initial impression. You need to start strong with all of these different ideas that we've talked about. Check out Vanessa's video. There's a link to that down in the notes. And that's a wrap for this presentation on how to make your investor pitch compelling. If you follow these 8 guidelines, you'll have a much more compelling presentation than you would have otherwise. If this was helpful, please click the like button and share it with other entrepreneurs. If you haven't subscribed yet, please do that. And leave a comment. What are you struggling with in your investor presentation? And check out the whole series that we're doing on the investor pitch. There's a link to the playlist right below. And that's it for today. Thank you very much for watching.